What is up, traders? This is going to be a quick little video to explain the market crash that seems to be on YouTube. But first, let's go over this Euro USD pair real quick. As you can see, we were looking for this to happen. In yesterday's community post, I wrote, "Just sitting on my hands the last 2 days. I have not seen a setup that I've loved this week. Maybe tomorrow will give us an opportunity." Well, we got that opportunity in the London Open. I was not awake when this opportunity came. We didn't push all the way up into the area, but had I been awake, I would have obviously taken that trade. And then you got a nice daily expansion move to the downside, which made for a nice intraday trade or an intraday scalp. There really hasn't been anything that I love this week other than this right here because price has been in price discovery. Why is price in price discovery? Well, if you just type the word market crash on YouTube, well, that's not market crash, but it got the idea. You can see all of this nonsense that's been posted today looking for that clickbait. All these professional YouTubers, they just want your click, so they're going to say the market is crashing. However, we will use the best indicator we have to decide whether or not the market is crashing. As you can see, the S&P 500 is having a bit of a down week, and last week we ended on a down note as well. Let's just go all ahead on down to the low. You can see that we hit 4.46% on this low to the downside, off from the all-time highs. The market's not crashing. It's not even close to being a crash. When can a YouTuber legitimately say that the market is crashing? I think a 10% correction from the top, that would be a legitimate crash. Let's go over here to the weekly chart real quick. You can see that on a weekly time frame, we have two red weeks. This week that we are currently working on is a doji to the downside, which doesn't look healthy, but you know what? We got tons of support underneath of us. Let's go move this line to where their support should be, which is right there, all right? That's your last bearish close. Since you've been down there on a weekly close basis, you have not been back, or you have not been able to close back down there. So that is obviously the area where support is. All right. And until you're closing a weekly below there, you can't even consider this a market crash. This is nothing but a correction, a simple, tiny pullback, a 4% pullback, people. 4%. That is it. All right. Let's go look at Bitcoin. It gets me all upset when I see all the clickbaity titles and stuff. But anyways, let's move on. Enough of that. So Bitcoin has had a couple nice days. It's obviously awesome that Bitcoin is starting to be viewed as a hedge against inflation. That is fabulous. I don't think that anybody can really, truly, honestly say that that has ever happened in Bitcoin's history. Yes, Bitcoin has been going up, but Bitcoin has been extremely volatile from before 2019. As of this year and last year, 2020 and the beginning of this year, Bitcoin's been doing different things. Well, that's because of all the different funds that are getting involved in Bitcoin, all the money that's being thrown in the direction of using Bitcoin as a hedge against monetary policy, which is terrible in America right now, which is another thing. Let's go look at the interest rates and bonds real quick. First, we'll go take a look at the DXY, as the DXY has been range bound. Let's go look at a monthly candle real fast. All right, you can see that since we had a nice red range expansion on a monthly time frame, this down here was your support because that's where you closed on a monthly time frame. You can see that you tested below that but closed back above it, yada yada. All right, so moving forward. This right here, the first line, 91.602, is a target until you're closing a monthly above 91.94, which is your resistance for this range of price. All right. Your near-term resistance is that level. And as long as you're not closing a monthly above that level, you are still bearish on the dollar. All right. You are still bearish on the dollar. So, all right. Let's put this back down here because that is a target. Let's go look in an intraday or on a daily time frame so you can see what I'm talking about. This up here is going to be your target. You are trading above the 21 exponential on a daily time frame, as you can see. So basically any pullbacks down to this daily support level at 90.78 would be looked at possibly as a buying opportunity, and the target is going to be 91.602. Am I bullish on the dollar? Not until we get that monthly closure above 91.94, but I will take long trades to the upside as long as it looks like that's the way price is heading, as I am a creature that trades from price and basically price alone. I do look at moving averages every now and then just because they put things into perspective, but always remember that a moving average is an average of price, and it only calculates that average at the close. All right, so it follows price. It's a lagging indicator. So price is not a lagging indicator. Price is price. So keep an eye on price. Now let's go look at the 10-year right here. You can see that we are having a pullback. This is putting a bid underneath the dollar, but you've got some work to do before you can consider this thing bearish. As you can see, the near-term trend on this is obviously up. You can come all the way down to here because you've already closed below this bullish candle's closing price. So the next area of support is going to be 131.275. All right, this level right here, which is simply this last bullish closing price. And you do have this swing high right here, but price has already traded through that. It could be coming back down to retest this area to look for price to continue higher. If you take out this all the way down here, now this is a monthly time frame, so this isn't going to happen anytime soon, then this thing's heading lower and your interest rates are going to remain heading higher. All right, now remember, the Fed is trying to keep these things low. As you can see, since 2008, or all the way back here to 1980, since the Ronald Reagan era, these things have been doing nothing but going down. Every pop in price has been getting sold into, yada, yada, yada. This is a massive downtrend. I see no reason to say that this trend has changed, i.e., the markets are crashing. No, it is not. Anything up into here is going to be possibly sold into. You know, the Fed will load up with their infinity amount of bullets as the US dollar printer runs. You know what I'm saying? They could absolutely keep these interest rates low. I do not think that they will have any problem in doing that. So just a quick video to say, please don't sell everything. Please don't buy SPY puts thinking that this is the end. This is the end of the world. We're all going to die. No, the stock market's doing just fine. It's on a 4% correction, to say the least. After 10%, then you could possibly call a market crash. But until then, you have a simple pullback, which is still, in my opinion, a buying opportunity. So with that, I'll end this video. Make sure you trade safe, make sure you trade smart, and happy trading.